Erica Najarian, UBS large cap bank and consumer finance analyst, joins us now. The stocks have been acting pretty well. The S&P Financials group trading near the highs. Erica, how do you pick winners from here into earnings?
Yeah, look, I think at the end of the day, we have pretty overwhelming macro catalysts. You had the presidential debate, and I think let's call it the election future started pricing in a Trump victory. And I think everyone was dusting off the 2016 playbook. Additionally, I think the jobs number had increased the probability of a September rate cut to 75%, which also, brought out the rate cut playbook for financials. And I think that's why you're seeing recent underperformance. But the way I think you can distinguish from here is, who has the capital to do better if we do have, a pretty stable economy and loan growth comes back. And, at the end of the day, the stress test results that we got the Wednesday before the presidential debate was actually quite differentiated in terms of winners and losers. And, that's really the part of the genesis of the, upgrades and downgrades this morning.
Right. So why PNC? And I do wonder if regionals, and I know they don't like being called a regional, they're much bigger than that, but are a play because they've lagged.
Oh, absolutely. I think that the regionals are at play, to use your words, would probably be smaller than PNC in terms of the KRE stocks. Keep in mind that the mid-cap stocks are still very much feeling, the brunt and the memory of the regional banking crisis of 2023. And when we took the 6 rate cuts off of the table that everyone was expecting in January, and you still had lingering commercial real estate concerns, and they became super unpopular. And I think that the Trump/rate cut playbook very much benefits the KRE. I think PNC is a different story in that they have excess capital. They had a good result from the stress test. They're one of 2 banks, JP Morgan is one of them, that still retained economic interest in Visa Class B shares. So they had an extra source of excess capital when they monetized that. And so they're ready and willing to play offense organically and potentially down the road inorganically in terms of growing above peers. And they have interesting inflection points in their net interest income from lower yielding assets running off and being replaced with higher yielding assets that could be an extra boost for net interest income and revenues.